Hey everyone, welcome back to Corporate Decoder, the place where we try to untangle those confusing corporate reports to find the juicy bits today. We're looking at Las Vegas Sands Corp's Q3 2025 report. And let me tell you, there are some interesting numbers and big moves happening, especially with those massive borrowing plans and big property plays. So, the big news right off the bat is their financials. In the first 9 months of 2025, their net revenues jumped up to $9.37 billion. That is a cool 11.5% increase from the same time last year. A huge part of that jump comes from their Singapore operations, specifically Marina Bay Sands. Their casino revenues there shot up by a massive 38.7%. Think about what that means. That is like bringing in way more chips to the table. And they seem to be winning more often too, with that non-rolling chip win percentage jumping a good chunk. In the third quarter alone, their total net revenues hit $3.33 billion. That is a solid 24.2% increase year over year. Again, Marina Bay Sands is the star player here, seeing a huge 79.5% jump in its casino revenues. They're definitely raking it in over in Singapore. It is like they found the golden ticket for attracting high rollers and keeping their winnings high. Now, let's talk about expenses. Their casino expenses also went up, which makes sense when you are bringing in more money, but a big part of that increase for Marina Bay Sands was due to gaming taxes. Singapore has a tiered tax system, and it looks like their luxury play kicked them into higher tax brackets in July 2025. This means bigger wins for the government, but fewer dollars staying in the company's pocket per dollar bet. Meanwhile, back in Macau, things are a bit more mixed. While their overall net revenue is up for the quarter, some of their individual casinos like the Venetian Macau and the Parisian Macau saw their casino revenues drop compared to last year. It looks like they are facing some pretty tough competition there, and the rolling chip volume, which is basically their VIP play, took a nosedive at the Venetian. That is a sign that maybe the big spenders aren't betting as much as they used to, or perhaps they're spreading their bets around to different places. But it is not all gaming. Their mall operations are also doing pretty well. For the third quarter of 2025, their mall revenues increased by $10 million compared to last year. Especially at Marina Bay Sands, their mall revenues are up 9.5%. It seems like these integrated resorts are becoming more than just casinos. They're becoming shopping destinations too. Think of it like this, even if a few gamblers aren't hitting it big, the shoppers are still opening their wallets, providing a nice steady income stream. When we look at their adjusted property EBITDA, a measure of operational profitability, it's a mixed bag. For the quarter, it was up 35.6% to $1.34 billion. Marina Bay Sands is really driving that growth, seeing a huge 83% jump. But in Macau, while the total adjusted property EBITDA for the region is up slightly, some of those individual properties are actually seeing decreases. This tells us that while the overall company is doing better, the competitive pressure in Macau is definitely real, and not every property is winning the same way. Now, let's get into the nitty-gritty of their finances, and this is where things get really interesting. Their debt levels are massive. As of the 30th of September 2025, their total debt was over $13.8 billion. They've been busy borrowing money, especially with that new 2025 Singapore credit facility, which brought in a huge amount of cash. They're also issuing new notes like the 5.625% senior notes due in 2028 and the 6.000% senior notes due in 2030. This is a company that is not afraid to leverage up to fund its ambitious expansion plans, like that huge $8 billion MBS expansion project in Singapore. On the flip side, they've got a decent amount of cash on hand, over $3.35 billion in unrestricted cash. That is good because with all that debt, you need a healthy cushion. It seems like they're playing a high-stakes game, borrowing big to build big, hoping their new and improved properties will generate even more cash to pay it all back. It's a strategy that could pay off big, or it could lead to some serious financial headaches down the road if those new developments don't perform as expected. Looking at some of the downsides, they took a hit with a $68 million loss on disposal or impairment of assets in the third quarter. A big chunk of that is tied to them deciding to stop pursuing digital gaming activities and also giving up on that casino license in New York. This shows that sometimes even big companies make bets that just don't pan out and they have to cut their losses. And then there is the legal stuff. They're still embroiled in that massive lawsuit from Asian American Entertainment Corporation. Limited, this case has been going on for years and the amount claimed has exploded to over $12 billion. While current court rulings have favored the company, the plaintiff is still appealing, and it is a big cloud hanging over their head. It just goes to show that in business, especially in certain parts of the world, legal battles can be long, expensive, and incredibly uncertain. Scroll overall, Las Vegas Sands Corp is a company that is clearly playing the long game. They are heavily investing in growth, especially in Singapore with their massive Marina Bay Sands expansion. They're betting big on attracting premium customers and diversifying their revenue streams through high-end retail. Their debt levels are substantial, but they seem to have enough cash flow and access to credit to manage it for now. However, the competitive landscape in Macau is a serious concern, and that ongoing lawsuit with AEC is a significant risk. The company is showing resilience and growth, but it's a high-stakes balancing act between ambitious expansion and managing considerable debt and legal challenges. So, what is my take? Las Vegas Sands is clearly pushing forward, aggressively expanding in key markets and trying to become more than just a casino operator. Their financial performance in Singapore is a huge positive. However, the increasing debt load and the persistent competition in Macau are definitely areas to watch. Investors should be excited about the growth potential, but also wary of the risks involved in their aggressive expansion and the lingering legal uncertainties. Alright, that is our breakdown of Las Vegas Sands Corp's latest filing. What is your take on these numbers and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.